What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is November 29th of 2022. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to try to answer a big question I think on the minds of a lot of people at the moment. While yes, we are in the midst of a pretty brutal bear market, a restructuring of the crypto industry, and both Bitcoin and Ethereum likely have more room to go down before we discover a clear and genuine bottom. Big question on a lot of minds of people, and I think they're thinking in the right direction, is whether or not we go long Bitcoin or Ethereum during the next bull market. Thinking ahead, trying to have a plan in place, and trying to understand fundamentally which one holds up stronger. Now, while I am going to be, again, emphasizing that I think both plays are going to be moving down over the next couple months, I want to spend some time today to swiftly talk about the three key reasons why one of these plays is going to lead against the other, and why I think it sets the foundation for it to lead versus the other asset. If you enjoyed this video, consider dropping a like. It's free and it's a great way to support the channel, but let's go ahead and kick things off, guys. So, we've talked a lot about price action here. We've talked about the continued signs of a bear market, but I don't want to focus so much here on the Bitcoin price chart. I want to take a look at one of the best charts to start here, and that is the Ethereum to BTC ratio. Now, for those of you who have traded out there, this is a trading pair that's commonly used to trade from Ethereum to Bitcoin. But generally speaking, I want to emphasize that this serves as a ratio. And many of you who have watched the channel for a long time know that I love ratios. They give us not so much a measurement of whether or not one of the assets is going up or down in dollar terms, but rather which asset is outpacing the other as we remove the dollar out of the pairing, and it's practically just Ethereum and BTC. So, i.e., if Ethereum is outpacing Bitcoin and its growth, or at least holding up better in dollar terms versus Bitcoin's dollar terms, then it's going to be moving up. And vice versa, when the ratio goes down, Bitcoin is the better performing asset, right? Again, both of them can be going down. That's usually what's happening during these bear market periods, and I'm going to build into that here as we go throughout the video. But let's go ahead and talk about these three dynamics here. While we do believe that both Ethereum and Bitcoin are going to be going down in value, and I think Ethereum still has about a 50% correction, anywhere from around a 33% to 50% correction before we really find that buying opportunity. I want to emphasize the first thing, which is price action. Now, we've got fundamentals, which we're going to talk about, but to be honest, while people debate about price action and its relevancy, I think that price action is the most important, because the market will tell us more than anything about the fundamentals of a company or the fundamentals of a project or crypto. The old saying goes that a lot of investors get this wrong, which is that a lot of investors want to just buy the biggest dip because they think that it's going to go vertical and recover and have the best returns. But in reality, you want to buy the market leaders. You want to buy the players who are in strength and show resiliency over a long period of time. And until that trend breaks, you should follow the trend. That's generally what the smart investors do. They buy the stocks that are at the 52-week highs, not the 52-week lows. And what's interesting here is that Ethereum, since back in 2017, January 2017, nearly coming up on 6 years, has maintained an upward trend support line for its price against Bitcoin. Take a look at this. We've got a few significant lows here. We've got the one back here in January. We've got the two lows here in August 2019 and January 2020, right before really the really big wave here came in the market again. Some of you may recall, if you followed the channel back in 2018 and 2019, we were basically absolutely spot on calling the bottom for Ethereum at $80 to $100. We wrote about this in the Dash report. We called it the golden opportunity for the next bull market. And I have to say, well, we've made some wrong calls. This was one we got spot on, because we were watching the ratios, we were watching these charts, we watched the double bottom here, and we again continue to see upward momentum of higher lows and higher highs. We got another low here in January and December of 2020 and January 2021. And since then, we have not set in another low here in this line. We've remained elevated since as far back as May of 2021. Now, while I do believe we are going to be setting in another low around that range, and if we get that opportunity, we are going to get really exuberant, very excited, and take upon that opportunity to build some long positions. The key thing here is that so long as that line holds, Ethereum in its price action has shown a continuous history throughout all the volatility of being the best asset to buy on the dip towards that line versus Bitcoin. Hands down. There's not much room for debate until that trend line is broken, where we'd have to probably readjust our strategy, think about it differently. In this case, Ethereum is leading. Price action. Another point for Ethereum there, 1-0 here. Now, let's go ahead and talk about another big fundamental element here. and that's monetary policy. Now, if you guys know about crypto, you know about Bitcoin, you probably know about the Bitcoin halving. You probably know about the fact that every 4 years there's a supply reduction or a reduction in the inflation rate of new Bitcoin. And I want to emphasize, while the halving is very, very important, and it is going to have a sizable impact here in 2024 when we have the next one 4 years after the one we had back in 2020, which we talked and wrote about on the channel a lot, it is going to have less of an effect with each and every halving event. And I'll explain why. Now, the halving event is beneficial for Bitcoin's price. It will always be slightly beneficial over time for Bitcoin's price. And the reason why is because of the fact that it reduces the immediate introduction of new Bitcoin into the market each and every day. So, for example, as we go down throughout history, we can see some of the graphs here that start to visualize this, visualize the inflation rate. But I want to go ahead and again, go down here and just take a look at the past few halvings, right? In the 2012 halving, we went from 50 to 25 BTC. 2016, we went from 25 to 12.5. And in 2020, we went from 12.5 to 6.25 BTC every roughly 10 minutes, every block reward when a new Bitcoin block is confirmed on the chain. Now, when we were going from, say, 50 Bitcoin to 25 Bitcoin, that was major for Bitcoin's price, because back then that was reducing the hyper high inflation rate of Bitcoin. It was reducing a lot of new minted Bitcoins coming onto the market. But if we take ourselves to 2020, we went from around 12.5 BTC to 6.25. That's a reduction of 6.25 BTC. Whereas the previous halving events back in the past were a reduction of 25 Bitcoin per every 10 minutes. The dramatic effect of the halving events that used to play out are not going to be playing out like they used to. Now, do some math here, right? We're going to be going from around, roughly speaking, just for simplicity's sake, we're going to be going from roughly about 6 BTC down to about 3 BTC per block, right? Now, if we consider that, we do a little bit of math here, we're going to generally see that if you're considering that there's a block every 10 minutes, and there's generally, in this case, 6 10-minute intervals in an hour, multiplied by 24, and you'll generally be getting, if you multiply by the market price, a couple $1 million of Bitcoin that are being emitted every day. Right now, we've got 900 Bitcoin being minted. It'll be 450. And that is definitely a net positive. That means that there's going to be 450 Bitcoin worth the market rate at that time that can't be unloaded on the market by miners. And while that is a really good thing, we need to take a look at what's going on in Ethereum land. Because while Bitcoin has a near 100-year path to getting towards deflation or cap supply, Ethereum is now already starting to test with the concept of a capped supply or a deflationary supply as it grows more use in the network. And this is due to two things. It's due to the move to proof of stake, which reduced the overall inflation rate of Ethereum from its proof of work consensus mechanism, where there was a higher degree of new Ethereum being introduced. And on top of that, EIP 1559. Now, we talked about this back in the channel a while ago, but this was generally an effective update to the Ethereum network, that when some Ethereum is being used on the network for a transaction, deploying smart contracts, interacting with DeFi apps, some of it is sent to a burnt address that no one has access to. And this essentially reduces the effective supply of Ethereum that can no longer be utilized once it's burnt. And this has pushed Ethereum into a potential situation where it's already deflationary. Just to put this in perspective, with ETH proof of work, this is the kind of inflation rate we would have seen about 3.5% from when we initiated these updates. If we take a look here, this is the Bitcoin inflation rate, and right here we've got Ethereum. So you can start to see how this is definitely going to have a major support element for Ethereum versus Bitcoin. So we understand this dynamic here. But there's a third big thing at play here, considering EIP 1559. We need to understand that we have to think about not just so much that the network can be deflationary, but the use cases of the network. Now, when we take a look at the Ethereum ecosystem, I mean, I could pull up the chart here, guys. If you think about DeFi, NFTs, any potential use cases or things that you could build within crypto, they're not being built on some secondary chain on top of Bitcoin. Bitcoin is ideally aiming just to be sound money, a store of value. And while that is definitely an exciting use case, and Bitcoin still holds the biggest brand in the crypto space with that title, there's a very good chance that Ethereum could eat its lunch. especially with increasing use of layer 2 networks, increasing use of DeFi applications, NFTs, or other use cases that we just simply don't even know are going to exist in 2 to 3 years' time. What's going to be built, right? So again, the big thing I'd say is that, look, some people would argue that there's not going to be anything built here overall for the network. And while that may be true, right, it's still in a position where Ethereum is going to have favorable monetary policy versus Bitcoin. So I don't think that there's any real concern there, right? And I think that during this period of time, we just simply don't know what's going to be built then. If there is, on the other hand, some really exciting applications being built and they are on Ethereum, it is going to drive that deflation rate to an even more severe factor when it comes to considering the supply and demand of the asset. And that's why, at the end of the day, even though we do believe Ethereum will dip here below Bitcoin to some degree, again, somewhere between this kind of 33% range to around 50% over the next coming months, we don't think it'll be immediate. We are definitely excited about Ethereum. It's the same reasons we were very excited about Ethereum back then. We've just got even more points to be excited about it. And I think it's a big reason why the market is already starting to pay a premium here during this bear market and still is continuing to pay a premium during the bear market for Ethereum like it was during the bear market. But I think we are going to have a wave of capitulation. We are going to get a scare. We will get a better discount opportunity. But even if we don't, we'll definitely be looking at Ethereum as a play to go long during the next bull market, even if we're wrong on that, because that's just a further sign here that the signs and fundamentals of strength are at play here for Ethereum versus Bitcoin. Anyways, that's it for today's video, guys. I'm really trying to keep my videos a bit shorter here as we're in the bear market. One thing I wanted to let you guys know about is that I'm going to be doing a different content form. I'm just going to try it out. We took some feedback from the community in the comments. You guys know I really love hearing feedback from you guys, and I want to build content for you here on the channel. But we're going to start doing Monday, Tuesday, Thursday, Friday, taking a break on Wednesday and the weekends, doing 4 videos a week that are a little bit smaller than the other ones. So let me know what you think down below in the comments on this. If you enjoy this content format, drop a like, and also consider as well that sometimes we will have a sponsored interview or review that will make a video appear longer, but really will probably just be about 10 minutes. 15 minutes max. So again, check for the timestamps. Always feel free to check out the video, watch the daily update portion. If that's all you want to watch, totally fine. But that's it for today's video, everyone. Have a wonderful rest of your day, and I'll see you all in the next one. Take care, everyone.